Ladies and gentlemen, welcome to a December 10th, 2021 edition of This Week in Crypto. I'm Brian alongside my co-host Dino here. We've got a lot to go over. It's been a volatile week, to say the least. As you can tell, just looking at this screener here, we've had a red week, especially if you've been in altcoins. It's likely been a pretty tough time. If you're a bull, of course. If you've been shorting, congratulations on timing things well to kick off the week. But Bitcoin, even just in the last hour, was back at 50K and has dropped back down to 48.5 at the time of this recording. Ethereum is hovering just above 4,000. It's a little below what it's showing right now here on the screener. And then you can see, negative 20% plus for a lot of projects here on our top 100 asset screener. As always, before we jump into the metrics and discuss exactly why a lot of these drops have occurred, I want to remind everyone that this is not investment advice. What we do here, we are simply going over our metrics to discuss, based on history, exactly why prices have performed the way they have. And that being said, Dino, I would love to pick your brain a bit as to what you've seen over the past week here.
Thanks, Brian. So if you go back to last week's video, I think I start or open it by saying that there are signs that a correction might happen. So it's like in the first 2 minutes of our video. The reason why I thought, and that was on Friday, so right before the crash. The reason why I thought there might be a possibility that we see a correction is the fact that on the one side, we saw large Bitcoin addresses, so whales, start to dump some of their bags. As far as on-chain data is concerned, they have offloaded, I think, around 60,000 Bitcoin in a span of a couple of days. So that was, for me, a particularly concerning marker. And then on the other hand, we saw the social response or general sort of social sentiment towards Bitcoin be fairly confident and high, even though, we have been in sort of a month-long decline. So to me, that suggested that there's still quite a bit of market euphoria. And when there is sort of an overvalued sense in the retail sector in particular, and when there's an abundance of confidence and a lot of people, saying buy the dip, stuff like that, it's typically, not always, but typically a sign that we might still be a little bit overvalued and we need to dump further. So that's happened, obviously, pretty painful for a lot of people. What I think right now, at least in terms of just general network level activity, Bitcoin's metrics aren't looking that bad, to a point where I think if the trends remain the same in the coming weeks, especially in terms of Bitcoin's network level metrics, we could be in a good spot. However, there are still some concerning signals. That's sort of to be expected. Still, I think compared to last Friday, I think we're looking at a healthier Bitcoin. So at least relatively, comparatively, there are now some metrics that have normalized or reset to default. Specifically, I'm talking about stuff like MVRV and NVT ratio for Bitcoin, both of which are now sort of moving into a much healthier zone compared to weeks prior. So even though the correction was painful, we have seen some markers of weekend capitulation, a lot of panic sell-offs, and those are often prerequisites for a sustained recovery. So, we'll go through a bunch of metrics today. I think it was somewhat expected to see at least a short-term sell-off or short-term drop. Now, I think it could go either way, but there are some hopeful signs, Brian, in my mind, why we could go above 50K for the time being. But we'll talk about them as we go along.
Yeah, I agree. I think we can definitely go over, every important Bitcoin metric there is. Right before we do, I wanted to just show off how the trends of mentions of buy the dip are looking right now. You can clearly see that starting on the 3rd here, just about a week ago, people were really calling for the dip. So I think we were first noting this when we were on our video last week, how we were seeing this huge spike and people saying, this is the big dip to buy, nothing to worry about. And indeed, just like we often see, we saw a recovery. We got back up to around 51.5, almost 52K. But with this continued sort of initiative to keep the buy the dip mentions high, the prices eventually declined back down. This is very common until people stop talking about buying the dip and actually show some legitimate fear that this price downfall can last for a long time. Things will often continue to decline until people stop throwing in more money, just assuming it's going to go right back up to the price that they were expecting, right, Dino?
Yeah, so let's talk about social data for a moment. You are correct that we are still seeing a lot of excitement in the pockets of the community around the potential to buy the dip. Like for instance, we are right now, I think one of the top words in social trends is the word early. The reason why is because there's a massive trend on, massive thread on the, I think it's the cryptocurrency subreddit. It's one of the big crypto subreddits. Today, there was a massive thread saying, we're still, it wasn't even like discussing whether we are still early to the cryptocurrency boom. It was discussing whether we're early or very early. So it's just like the levels of how early we are to this thing and to this rally. So there's still, in pockets of the community, there's still quite a bit of euphoria about where we are right now, which remains a concern. Like if you zoom out to the last year of data, you will notice when it comes to people talking about buying the dips, they're usually pretty early to the party. Like it takes, once they proclaim that they want to buy the dip and that you too should buy the dip, there's usually like one or two additional corrections before they're quote unquote proven right. So don't really go by what the crowd is saying. That's lesson number one. That being said, there are some positive signs, potentially positive signs in Bitcoin social data. And here I particularly mean, Brian, if you go to graphs and if you look at Bitcoin sentiment, the last maybe, I think 12 to 24 hours. Yeah, there we go. Last 12 to 24 hours, we have seen a general decline in Bitcoin related sentiment of our messages. So let me explain how this metric works for people that are not familiar with it. What we do, we have a social data set. We have basically a data set of about 1,500 crypto related social media channels. So we track Telegram groups, crypto subreddits, popular Twitter accounts, other professional trader chats. So anywhere that the main topic of discussions are involving cryptocurrencies, we try to listen in on those conversations. And then we take the data, all of those messages that involve words around Bitcoin, and we parse them through a machine learning algorithm. And that algorithm labels the messages as either positive or negative or neutral / ambivalent. And this is the end result, this chart that Brian is showing right now. So what you're seeing is, we call it weighted social sentiment. It's essentially the average bias of the crowd, of the retail crypto community sector towards Bitcoin, plotted against the price of Bitcoin. So as you can see, even though like last week, right, when we were recording the Friday call, we had a massive spike in bullish sentiment. Like you can see that on December 3rd there was a major uptick in general level of bullishness towards BTC. And we talked about that during the call, and I said it's a slight cause for concern, because generally speaking, based on some of our backtest, when the crowd is super bullish about Bitcoin, it hasn't really been a great sign for Bitcoin's short-term price action. Obviously, there's no silver bullet or whatever, so take everything with a grain of salt. But there seems to have been quite a lot of still retail euphoria, even though we dumped already by that point by like 20%. So what is interesting, as far as Bitcoin social data is concerned, is that we are now moving back into a predominantly bearish territory for the first time since early October. So we are now at a 2-month low in terms of Bitcoin related sentiment. Now, it's still early days, right? But generally speaking, if you look at not just this year, but also the last couple of years of Bitcoin's data, Bitcoin has shown a tendency to sometimes recover from a predominantly bearish sentiment. So basically, when there's a prolonged period of bearish sentiment, several weeks or so, these seem to be periods in time where Bitcoin seems to show more price strength than usual. So like I said, we're still very early into this. This drop has just happened over the last 24 hours, but it's at least giving me some confidence that we are finally seeing the crowd start trashing Bitcoin and not believing in its short-term or long-term potential, believing that the bear market is upon us. There have been a lot of sort of mentions of the bear market recently. So yeah, there are still people calling to buy the dip, and that remains a concern. However, at least on the wholesale social side of things, we are seeing a pivot to more bearishness. So Brian, early days, but a hopefully positive signal for Bitcoin.
Yeah, I mean, really the first time Bitcoin has even touched negative weighted sentiment territory in a month. And with that, it's something that we haven't seen in a while. We've been in nothing but euphoria or at least mildly bullish territory for all of mid-November to right up until the past 24 hours.
I want to answer one question. John here in chat asks us, do you guys think the fear and greed index is a good metric? So, I mean, I'll answer it from my perspective, and then Brian, you can go ahead and give us your opinion. I don't think it's a good metric. The reason why I don't think it's a good metric is it poses itself as this sort of metric that conflates a lot of social noise and then makes a interpretative read of what the crowd is saying and what is the average sentiment of the a particular segment of the crypto community, mainly the retail traders, right? When you look at what is actually included in the fear and greed index, like what are the parameters, what are the indicators that are making the fear and greed index, social metrics or social mentions or general sort of social data, I think makes like 10% or 5 to 10% of the entire calculation. Most of the stuff that goes into the fear and greed index is price, market cap dominance, and volatility. And then even when they look into stuff like what is the general crowd saying, they're using Google Trends, which I don't think are super reliable. And they're using, I think, only Twitter hashtags for specific words to figure out whether a coin is talked about more or less. I don't even think they're doing some high-end sentiment analysis on it. So I think it's fairly rudimentary. If you're trying to figure out whether the crowd is super bullish or super bearish, if you want to, like, you could just use TA and get the same results, right? As far as figuring out what is the pulse of the crowd and what the retail sector is really talking about, I really think you need a more robust social data set. And that's what we've been trying to build over the last 3 years. I think we've succeeded, or we're continuing to sort of push this thing forward. But I don't think currently there's anybody else in the market that has the same social data set as we do. So that's at least my opinion on the fear and greed index. I don't know what you think, Brian.
Right. Yeah. I mean, biases aside, because we obviously have a way of measuring crowd fear and euphoria as an alternative to the fear and greed index, which is widely popular. And I think part of the reason it's widely popular is because it's been cleverly marketed. Its naming is a very simplified way of indicating how happy or sad people are when it comes to their investing. However, I find the title of it to be a bit misleading because, just as Dino said, a lot of it is based on things like volatility and recent price swings, which aren't at all related to fear and greed. If the price of Bitcoin drops 10% in a single day, the fear index on that site will automatically head to the left and show that people are fearful, even if there's no data reflecting that, because of the fact that price is such a large ingredient to what makes it either a fearful or greedy output at any given time. And I find that irresponsible to call it fear and greed when it's making presumptions of how the crowd feels in one big vacuum, regardless of actually showing any evidence. Of course, there is some evidence that's mixed in, but it's relatively small compared to just whether price went down or whether price went up. They're making the assumption based on just a wide brush of history that people are going to be fearful or greedy, dependent on which direction price is going. So I agree with Dino. I think it's a bit misleading, if not majorly misleading. And what we do is we really put it to the test by scraping hundreds of thousands, if not millions, of social readings on any given day to prove whether people are being fearful or greedy. And if people are excited to buy the dip with us, that'll actually show. If people are not excited to buy the dip, that will show too. So sometimes downswings will show people are greedy. Sometimes downswings will show people are fearful. And that's really the true way to measure things. It's not always going to be the same just because of a price move.
Yeah, so I think, Brian, we can, since we're already 15 minutes in, we can move into on-chain data for Bitcoin. We'll talk about social data more, guys, later if you guys want us to. Cliff notes are, we are now moving to a bearish sentiment for the first time in a while, which could be a good sign. However, there's still a whole lot of people talking about buying the dip, which makes me personally a little bit uncomfortable as far as like finding an entry position. So I would much rather wait for them to chill out and stop calling for start calling for people to buy the dip, and then maybe find a potential entry. Now, as far as on-chain data for Bitcoin is concerned, I was actually quite surprised this week. Not gonna lie, I thought once we dump, I thought most of network level metrics for Bitcoin are gonna go like to oblivion. I thought they were going to completely shut down. I personally thought that we were going to see the amount of addresses interacting with Bitcoin drop by about 20 to 30%, similar to what we saw in May. I thought the amount of unique units of Bitcoin moving on the blockchain are probably also going to drop by about 20 to 30%. None of this has happened. So this to me is a potential, like I said, we're still pretty early, but a potential bullish divergence in terms of just network level metrics, right? So it's just a couple of indicators. It's not sort of the entirety of our data set here, but in terms of just the amount of activity that is still going on after the dump on the Bitcoin blockchain, Brian, I think it's still looking relatively strong, right? You have this, you're showing the circulation for Bitcoin, which is the total amount of unique BTC moving on the blockchain daily. And it seems like overall, the trend still seems to be going in the upward direction, even though we had a pretty volatile, like downwardly volatile price action in the last couple of weeks, right?
Right. Yeah. Even going back to October here, we've been in a relatively healthy phase for circulation. Price was able to really grow upon these rising circulation bars that happened here in late September to early October. And even when things dropped off, we saw this major one here on November 26th, marking a lot of polarization and people either buying or selling or really trying to get ahead of what just happened with that second wave of the dip at the time. And even on the third wave of the dip, we're still seeing huge bars of circulation relative to where price is. And we can actually reflect how circulation looks relative to price by going to our NVT chart here and clearly see that beginning in October, we started seeing a semi-bullish color after, I believe it was 8 straight months of bearish output for circulation, which thus had a ton of volatility and a big initial price drop off of that first all-time high that happened back in April. So all things considered, we're in a very good spot in terms of circulation right now because price has dropped, but circulation has stayed up in relatively the same spot that it was in October, November. That's what's causing the first solid green bar that we've seen since December 2017. Now, of course, take this with a grain of salt. We're only about a third of the way into the month right now, and green can easily turn back into yellow-green or even yellow for neutral. It's probably not going to be worse than yellow neutral, but all things considered right now, we're continuing to get very good circulation, and this is a positive sign, one of the good signs at least, in terms of Bitcoin's on-chain metrics right now.
Yeah, so one thing to obviously mention when we're talking about circulation, right, is that if you look at what happened around last Friday, there has been a big uptick in circulation when Bitcoin dumped. And that's something to keep in mind, is that once Bitcoin dumps, there usually is like a short-term spike in circulation because a lot of people are moving their coins, some of them to sell, some of them are sort of panically rebalancing their portfolio. So in general, I don't pay too much attention to like short-term spikes in circulation. What I'm more interested in is the overall long-term trends. And so far, the trend still continues to go to the upward side. So we are seeing more and more value being transferred on the Bitcoin network daily. And I think that's a positive sign for the network effect of the Bitcoin blockchain, and in general for its for the sustainability of its price action. And what's even more impressive to me is if we look at daily active addresses for Bitcoin, and I actually use that as a thumbnail for this video, it's looking surprisingly strong this week. Let's do rolling 24-hour addresses, Brian, because it's looking it's even more impressive. So what we're going to see now is the total amount of unique addresses that are interacting with Bitcoin in a rolling 24-hour span. So look at what happened in May. All right, let's compare it to that. So once we started to dump and once the market started to crash, we have experienced almost immediately a 25% drop in Bitcoin's daily active addresses. So basically, a lot of people just completely retreated from the market. And these were sort of early signs that we're not going to see fundamental support and network level support for a price bounce back, right? So what's interesting to me is that if you zoom out maybe to the last 3 months, we will see that this week in particular, even after the crash occurred, not only did the Bitcoin's daily active addresses not drop significantly. So if you see that drop that happened right at the start of the week, that's the weekend. So that's a bit like these, you can see these valleys happen every now and again. So those are weekend valleys, and every weekend Bitcoin's network activity kind of slumps, and that's to be expected. But what happened since Monday is we have seen higher highs in terms of Bitcoin's daily active addresses, even though its price action was pretty boring and it actually was not inspiring whatsoever. So yesterday, we saw the amount of Bitcoin's daily active addresses spike to 1.10 million. And I think that's only like the 5th day since the May correction that we had that amount of addresses interacting with the BTC on a daily basis. So again, this is a very small sample of data, just a couple of days, but just based on trends and historically, based on what we've seen around previous corrections, I would have expected, if this was sort of the beginning of a major correction or sort of a cascading downtrend, I would have expected to see much less in terms of network level activity. But it seems like still people are using the Bitcoin blockchain, values being transferred ad nauseum, and in general, on-chain analysts use these metrics like daily addresses and token circulation as a proxy for token-related demand. And so the higher these metrics are from an on-chain perspective, the more there is sort of justification, like fundamental justification for the price to rise, because we're seeing more and more addresses, entities, and people interact with these protocols and with these tokens. So yeah, again, early data set, but promising nonetheless, at least in the short term, Brian, maybe.
Yeah, I think address activity overall, I like to look at it, mostly on a macro scale these days. When I'm checking things out for a social post or something, I may look at something like the 200 moving average when it comes to a rolling average like this. Which shows that we've mostly been flat at the very least. It kind of cuts through the noise of these really, really high highs and really low lows. If I zoom out to the last year, we'll see, clearly the big drop off and the impact it had on this 200-hour trend line here. And then the recovery that we've really had since the beginning of October, just like in circulation, when things flipped from bearish to semi-bullish and now are in bullish range due to the drop, we're seeing a nice uptick, and the 200-day trend or hour trend still hasn't stopped rising. So that's a good sign, and especially when price is declining as the rolling average is rising, I think it's historically a better sign than most. So we can leave it at that for address activity.
Yeah.
And with both this and circulation still looking healthy, it's hard to be too fearful about the volatility that's going on right now, at least for long-term holders.
Yeah, I mean, obviously, not all metrics are looking as good, but network level, I think Bitcoin is looking decent, at least compared to what I would have expected to see happen. So I also wanted to briefly talk about net profit loss for Bitcoin, Brian. So this is a metric that I used in the weekly report to show what was the impact of the drop on Friday. So this metric, guys, what it does is it looks at or tries to calculate the total daily ROI of all Bitcoin transactions. So what happens, or the way we calculate this metric, is for every unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved, and we assume this was its acquisition price or buy price. And then the next time that that same unit of Bitcoin moves on the blockchain, we take that price and we assume this is its sell price. And so the difference between those two prices becomes this metric. And so when there's a big spike in net profit loss, that points to a period in time where units of Bitcoin are moving at a significant profit relative to the last time that they moved on the blockchain. So potentially relative to the last time that they were acquired. And then these big dips, which has happened recently, point to a period in time where units of BTC are moving at significant loss relative to the last time they moved on the blockchain. So I wrote about this in the weekly report that there has been a major drop in Bitcoin's net profit loss after the Friday correction, one of the largest in Bitcoin's history, actually. So here it doesn't necessarily look all that large because there was a similarly massive spike in May. But if you look at the entire history of Bitcoin, these are the two biggest drops in Bitcoin's net profit loss ever. The May one and the one back on Friday. So obviously the part of the reason why that is because of the meteoric rise in price that Bitcoin has experienced this year. But nonetheless, so what you're seeing here is you're seeing that at around 46 to 47K, there were a lot of people that were moving their bags at a loss. So that would suggest like 46 and 47K still isn't that low for Bitcoin, right? There haven't been too many weeks or months where the price of Bitcoin was higher than this level, right? So the fact that you're seeing massive drops in net profit loss means that a lot of people that have acquired, or a lot of addresses that have acquired Bitcoin at higher prices than these, were the ones that were moving BTC immediately after the correction. So to me, that points to, alongside some spikes in exchange inflow that happen at the same time, that points to weak hands capitulating and sort of a period of panic selling, which, even though obviously all of this is painful, these things are often necessary for us to redistribute to stronger hands, diamond hands or whatever, and move to a sustainable price rally scenario once again. So you will notice back in May, there have been several sort of drops in Bitcoin's net profit loss around local bottoms, and then eventually that was sort of a precursor to a recovery. So this massive drop that we saw a couple of days ago, basically over the weekend, was another sign that hands that have, or addresses that have probably acquired BTC throughout this latest rally or this latest 3-month recovery are the ones that are now pretty scared and moving their bags away. So another sign of like wholesale panic. And I like to see these markers of pain in the market, because otherwise, if you saw like a 15% drop and then nobody was making moves, nobody was selling, everybody was super confident that we are going to bounce back, this is where I would be actually very, very concerned about Bitcoin being able to recover. At the very least, we are seeing some signals or sort of on-chain indicators that the holders are in fact very scared about Bitcoin's chances to recover. And this, I think, puts us in a better position to sustainably recover, assuming that other metrics hold, right? Now, Brian, let's also look, since we're already 30 minutes in, let's also look at what the whales are doing for Bitcoin, right? Because last week, I noted that large addresses holding BTC, and by large addresses, I mean we typically look at all addresses that own between 100 and 10,000 BTC. So I know this is a very large range, but it's essentially all Bitcoin millionaire addresses, minus the biggest BTC addresses. So anybody, any addresses holding more than 10,000 BTC are excluded from this. The reason for that being is that there's only about 85 addresses that have that amount of money, and they are disproportionately centralized exchanges. So I don't want to use that in this sort of analysis, because I think the 100 to 10,000 BTC range is more sort of representative of the actual whales, like individual addresses holding this amount of Bitcoin wealth. So last week, right before the correction, Brian, you can see that, and we talked about this last week on the call, there was a pretty significant drop in the total balances of these large addresses, right? So that here, what Brian is showing right now in yellow, that's about a 60,000 BTC drop, so several billions of dollars that have been moved away from these addresses in a span of about 3 or 4 days. So if you think that this is a sort of a potentially leading indicator, then you might consider this to be a relatively concerning signal, because it might point to a lack of confidence by some large BTC addresses. Now, what's interesting is that we have since last week, right? What has changed? Well, first of all, the first part of the week, so between sort of Monday and Wednesday, we have seen a recovery in terms of the amount of BTC held by whales. So there was about, I think, 40,000 BTC has been added by these addresses between Monday and Wednesday. And I thought, good, hopefully this is the start of another accumulation trend similar to the one that we saw sort of from early September to early November. Unfortunately, last couple of days have moved back down. So we haven't really had much time to rejoice about the Bitcoin whales accumulating once again. It seems like there's definitely some undecidedness in terms of Bitcoin whales as well. So there's no sort of a bullish consensus in terms of large Bitcoin addresses and what they believe where they believe the market will be headed to. This could also be prompted by a lot of news coming from the US in terms of Senate hearings and other sort of regulatory scares. For whatever reason, though, large Bitcoin addresses have moved to the downside once again over the last 48 hours, Brian. And that might be another sort of sign, like it's still early, but it could be a sign for concern in the short term.
Yeah, it's actually been quite impressive how correlative the price has been to what these whales have been doing. We can see that it peaked here right on December 7th or so, right when the price got back up above. It actually got to about 51.5, close to 52K at one point. And then they started taking profit once again. So a lot of people who were buying the dip were ready for it to go back up to 55K and beyond. And then the whale said, no, we're actually going to take profit again now that we bought the dip and things went up. And right after they did, things started to slope back down, and they've stayed down, at least as of the time of this recording. Overall, if we look at the last couple of months going back to late October, the trend in terms of the percent of supply held by this gold line here, it looks like they've dropped about 0.64% of the total supply, which is a pretty massive amount, all things considered. It's about 1.3% of all of the coins that they hold. And that has a lot to do with why this downtrend has happened, because whales do control the market. And even though the all-time high happened about 2 weeks after they started to take profit, eventually the price catches up. And if it does have that 2-week lag, then things tend to fall a little bit harder from what I've noticed. So when it did hit the all-time high, we started having these huge drops in price, one after another. And of course, whales are accumulating a little bit and dropping a little bit in between it. But all things considered, a lot of people got faked out if they were watching this whale accumulation that was going on here because of the fact that they immediately started to take profit once again after that minor price rise happened.
Yeah. So guys, it's up to you to determine what you think this means for the market, but the last couple of days seem to have shown a little bit of a lack of confidence by some large BTC addresses. Let's do one more indicator, and in the meantime, I would ask chat to spam the tokens that they would like us to analyze. So guys, we're going to talk about MVRV for Bitcoin, and then we're going to get into audience questions. All right. So if you have a coin, an asset, a digital cryptocurrency that you would like us to analyze here live on stream, let us know in chat. So just use the chat function to tell us which coins, which tickers you would like us to analyze, and we'll do some impromptu 5 to 10 minutes analysis. Keep in mind that we do have on-chain data specifically on-chain data for a limited set of coins. By limited, I still mean there's like 1,200 different coins that we have on-chain data for, but it's not available for every coin out there. It's sort of impossible to track all blockchains. So currently, we provide on-chain data for Bitcoin, Ethereum, all ERC20 coins, XRP and Litecoin blockchains. And we are maybe integrating some new blockchains soon, but more on that later. So if you want us to do analysis on these types of indicators like MVRV, daily active addresses, stuff like that, then make sure that it's an ERC20 coin. If not, we can still look at stuff like social data, development activity data, price and volume information. So we can do some analysis outside of the scope of on-chain data. But if you like these metrics, the ones that Brian and I have been talking about for the past like 30 minutes, then make sure that it's an Ethereum-based coin. All right, good. Thank you. And then Max, once you guys have spammed enough, Max will make a poll out of the most popular coins so that you can vote on which of those will make the cut. Good. So Brian, let's talk about MVRV because I thought it was looking quite interesting. So MVRV is an indicator that it's an on-chain indicator that tries to compute the average profit or the average loss of a group of addresses, right? So here, Brian is showing the 30-day MVRV ratio for Bitcoin. And actually, Brian, let's look at the intraday one because the intraday one even dipped further during the correction. I think like all the way down to almost minus 19%. So the 30-day MVRV ratio is a metric that shows the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days, right? So it's the average profit / loss of short-term holders, of swing traders for Bitcoin. So as you can see currently, what's that, Brian, around minus 11%, it seems like?
Yeah, it's currently at minus 11.8. It got as low as negative 19.4 on the 4th.
Yeah, exactly. So minus 11% means that at the time of this recording, right, the average loss of all addresses that have acquired Bitcoin in the last 30 days is minus 11%. So they're down 11% on average. So not every address, but on average, all addresses that have acquired Bitcoin in the 30 days are down 11% on their initial investment. So then the question is, how do you use this metric? On-chain analysts, what they do is they look for historical highs and historical lows of a particular MVRV, because the premise is the higher the MVRV ratio gets, the more profitable these traders are, the more unrealized profits there are, and as a result, the more risky it can be to enter into a trade then, because what you're doing is you're essentially entering into a trade against a lot of people that might be looking to take some profits off the table and dump on you, right? And then on the other hand, the lower the MVRV ratio gets, possibly it's a more opportune time to accumulate. I am saying possibly because this is by no means sort of a perfect metric. So with that in mind, Brian, can you show us the last 3 years of Bitcoin's MVRV ratio? Because I want to show what are sort of the highs and lows for Bitcoin's 30-day MVRV ratio. Because generally speaking, I mean, we talk about this quite often. Bitcoin's 30-day MVRV ratio has a tendency to peak between plus 15 and plus 20%. Right? There have been a few times in Bitcoin's last 3 years that it was able to peak above that level, but usually that lasts for like 1 or 2 days and then it moves back down. So even if we go about that 20% level, plus 20% level, all that is saying is that we are massively undervalued and we're probably due for a correction, right? So that's on the, okay, the poll is up in chat, guys. Make sure to vote on the coins that you would like us to analyze. All right. So these higher levels of MVRV are where you should be probably fairly scared about short-term prospects for BTC. And then on the other side, and this is what's interesting, on the lower end of the spectrum, Bitcoin's 30-day MVRV ratio seems to have two support levels. One is at around minus 15%, and the other one is around minus 25%. So during the Friday correction, Bitcoin's 30-day MVRV ratio went down to as low as minus 19%. Actually, if you look at the daily MVRV, not the intraday one, it went down to around minus 15%, which is where that really like support zone is. But in like maybe for a couple of hours, it was even lower than that. So what that suggested is that Bitcoin's 30-day MVRV ratio is historically moving into this potential bounce back zone. Now, you can definitely see here that there are exceptions, right? There are anomalies, like the Black Thursday was an anomaly where we dipped to as low as I think minus 50 or minus 60%. The May correction, we saw a crash down to I think around minus 30%. So there are levels that lower than this, but historically speaking, we have already sort of hit a first support level for Bitcoin's 30-day MVRV, and we have bounced back off of that level. We are now sort of slowly moving back down to it once again, and so the question is, what happens next, right? But I wanted to show you where we are in a cycle in terms of the average loss of short-term holders, and then it's up to you to decide what you think this means. But currently, we are pretty close to where Bitcoin's 30-day MVRV ratio, at least sometimes, it has a tendency to bounce back. Doesn't mean that it will once again. Now, this is as far as the 30-day or the short-term MVRV ratio is concerned. Let's also, Brian, look at the 365-day MVRV ratio, because it's not looking as good as this one, right? So this metric that Brian is right now going to show, this one shows the average profit of all addresses that have acquired Bitcoin in the previous 365 days. And currently, I think it's at around like plus 1% or sort of close to the break-even point. So that means that at the moment, the average profits of all addresses that have acquired Bitcoin in the previous year is basically there's no profits. They're about plus maybe 1% up on their initial investment, right? So historically, here from a macro perspective, we still have room to the downside, some room to the downside, right? We can still go down or dip down to like minus 15, even minus 20% before we can say really both the short-term and the long-term MVRV ratio for Bitcoin are undervalued. That being said, we are definitely far away from historical peaks for MVRV ratio. Like, I would have trouble saying that we are overvalued in terms of MVRV, both short-term and long-term MVRV for Bitcoin at the moment. And by the way, this is not the same for all for all coins. Like, if you look at Ethereum's long-term MVRV, the 365-day MVRV ratio for Ethereum, it's still at around like plus 40%. So it's still super high. Like, longer term holders for Ethereum are still sitting at around, on average, plus 40% of their initial investment. So there's quite a lot of money that they can still dump on the market and take some profits. That's not the case with long-term BTC holders. So it's up to you to, once again, to decide what this means. But generally speaking, the lower the MVRV ratio gets, some on-chain analysts believe that there's more potential for the coin to bounce back, especially if its other fundamentals are strong. And that's a big caveat, right? Like we've seen maybe 15 minutes ago, some of Bitcoin's fundamentals are looking okay. Like, whales are probably a little bit concerning, but in terms of network level activity, Bitcoin is looking decent. On-chain wise, addresses are growing, circulation is staying roughly the same. So there are some indicators or some potentially hopeful signs for us moving into this next couple of weeks, sort of the end of the year. So yeah, I wanted to talk about MVRV because I thought it was very interesting. And currently, a lot of coins, I think, Brian, you showed me before the call, we have a lot of coins in negative MVRVs right now, right? So because of this latest correction, a whole bunch of different assets, not just Bitcoin, have gone from like maybe slightly overvalued or sort of around the break-even point to these very, very negative MVRV levels. And so you have a template, Brian, that is sort of examining that for a bunch of different assets, right? Can you explain what the template is showing?
Yeah, of course, it's doing a refresh as it loves to do, right, as we like to demonstrate what it's showing. But for those of you who saw the first 10 seconds or so, there are mostly bullish indicators going on for these assets, these 40 or so that we're looking at on this chart. And what it's compiling right now is the divergence between negative and positive MVRVs across 6 different time frames, including the 1-day, 7-day, 30-day, 90-day, 6-month, and 1-year divergence for all these assets. And the closer they are to like that top 10% bullish zone, the closer it's going to be to this green dash line here. And the closer it is to the bottom 10%, in that case, it would be like, if you're looking at just the 30-day MVRV, we're talking about like plus 15% or above those would actually show negative scores like this. So it's kind of reversed. If it's a negative MVRV score, because things have dropped a lot, you'll see a lot of these big green bars. If it's a positive MVRV score, you'll see a lot of these red bars. Bitcoin overall is showing that it's about halfway after it finishes compiling all of the MVRVs. It's about halfway into the really opportunistic zone where it's historically a very good time to buy. But you can see that many assets like Compound, like Chiliz, like Uniswap, like Aave, they've really gotten hammered over the past week or so, and even over the past couple months, which is why something like the 90-day or even 6-month divergences are all showing very opportunistic scores for them. And that's why they're showing that historically they're in a very good zone for buying the dip on these assets. Now, all of that is kind of resting on how Bitcoin is looking. And when it compiles its final bar, it should be right around like half. Yeah, 0.44, there it goes. All things considered, this chart is showing that it's a better than average time to buy, or at least less risky time to buy based on history. Dependent on which asset you're looking at, some look great, some look moderate. There's still a few that are in negative territory, like MATIC, which has had a good week and 1 day. Therefore, their divergences are causing it to actually be a little more neutral than most. But judging by how the majority of the altcoin market looks, and even Ethereum, which is at 2/3 of the way to the opportunity zone right now, it is objectively a less risky time to buy than usual, according to this chart. You can ignore Binance and Loopring, by the way. They've been getting some skewed data for whatever reason in terms of just MVRV, but everything else here should be accurate. And if you don't have access to this, hit up our support or message us on our Santiment Discord, and we'll be happy to give you the link and the simple instructions to loop in your Sandbase Pro API so you can track this in real time and see which dip opportunities are presenting themselves in the most transparent fashion.
Thanks, Brian. All right, let's take audience questions. So Max, I think the poll is up. Can you tell us what the people want to see? What is the top voted coin for us to take a look at?
Top one right now is Polygon MATIC.
All right, cool. Brian, do you want me to share the screen or do you want to keep it?
Totally up to you. What do you prefer?
Yeah, I'll just share the screen for a while. Okay. One sec. All right, somebody in chat, tell me if you can see my screen. Seems like my laptop froze for a second. Can you still hear me, Brian?
I hear you fine, yeah.
Yeah, good. All right. It seems like it's recomputing something. There we go. Okay, yep. So you should be able to see my screen now.
Good to go.
All righty. So, guys, as far as ERC20 coins go, I just got a message from devs that like the last maybe 5 hours of data are being recomputed. So this drop that you're seeing just now, it's not real. Okay, don't panic. So it's just that the ERC20 pipeline is being recomputed at the moment. So the last maybe 5 or so hours of data are going to be missing for another couple of hours. Just it will be up soon. But still, let's look at MATIC, and let's look at a few different metrics for it, because MATIC has had quite a breakthrough week. It's trying to break another all-time high. We have seen a massive uptick in daily active addresses for MATIC as well. So generally speaking, when I see a massive spike in daily active addresses alongside price, I usually think, all right, a lot of people are selling. A good way to confirm this is if we look at active deposits, which have been up as well in the past couple of days. So generally, active deposits are addresses that are being used to funnel a coin to known exchange wallets. So when you send, for example, MATIC to, I don't know, Binance, It doesn't go directly to a Binance cold storage or hot storage. It simply first needs to go through a deposit address that also belongs to Binance, and then it goes to the exchange. So deposit addresses, their main and only purpose really is to move money to known exchange wallets. So with that sort of in mind, the more daily active deposits there are, you could say there's a potentially rising sell side pressure, right? So because as the daily active deposits grow, what that means is that there's more addresses that are moving their coins to exchanges. And why would you move your coins to exchange, especially while the coin is pumping, than to sell, right? To take some profits. So we have seen a considerable uptick in MATIC's active deposits around, seems like around local tops here. So let me zoom in a bit and see. Yeah, one around here, and then another sort of slight cluster of spikes around the next top. Let's look at exchange inflow as well. Yeah, okay, so this makes a bit more sense. Exchange inflow is the amount of coins moving to exchanges. Very simple, right? So while active deposits is the amount of addresses that are moving their coins to exchanges, exchange inflow shows the amount of coins that are being moved to exchanges. All right, we're on the same page. Good. So we have seen very recently, before this crash, there has been a massive uptick in sell side pressure for MATIC, or at the very least, there has been a lot of MATIC coins being moved to exchanges. Generally speaking, we will sometimes see this not just around the local tops, but also around local bottoms, like here and here. But now I'm not surprised to see that MATIC has struggled to break a new all-time high into this rising sell-side pressure. So, and also let's look at net profit loss. Yeah, so net profit loss has also spiked very significantly. What that means is that there's a whole lot of MATIC coins that are being moved at significant profit relative to the last time they moved on the blockchain. So in the short term, that's usually not a super great sign for the coin, because everything that these charts are saying is that there are people taking profits and dumping their bags, right? So in the short term, that's obviously sometimes going to lead to a price correction. And this is what we've seen so far. I don't think that's necessarily going to mean that this is the end for MATIC's rally. I think it's actually sometimes quite healthy for people to take profits along the way. Generally, I'm of the opinion that if you don't see any sort of desire to take profits, you see a lot of people just holding on to their bags, hoping that they inflate even more. That's where I would be even more worried. So yeah, in the short term, these sort of spikes in exchange inflow and net profit loss, these are gonna hurt the price of MATIC. But if its fundamentals are strong, I think this can be a sort of just a short-term correction, and we could see another way up. So when it comes to daily active addresses, MATIC has been spiking recently, but this is, I think, mostly because there's like an influx of new addresses that are selling MATIC. Like, it's not necessarily, at least I think, it's not necessarily like an organic growth in the new users of the MATIC token, in the new addresses that have all of a sudden discovered MATIC. I think what's more likely is that you see this spike in active deposits, this cluster here. What's more likely is that this cluster is contributing to total addresses on the MATIC network growing. What's going to be more interesting is what happens over the next couple of days, maybe even /weeks. So if we see a sustained uptick in MATIC's network activity, like if we see the amount of addresses interacting with MATIC continue to grow, I think that's a good, there's very little ways that you can spin that into a negative, right? As long as network level activity grows, MATIC has a potential to continue pumping. And also keep in mind that even at these like levels where MATIC was flat for a while, right, like 4,000, 5,000 addresses, that still puts MATIC in the top, probably the top 5 coins on the Ethereum blockchain, maybe top 10. So it is very much a hyper-used coin, hyper-utilized coin on the Ethereum blockchain. There are not many coins that have 10 or sort of 6 to 10,000 daily active addresses. I can like number them on my fingers on probably one hand. So generally speaking, MATIC is doing fine from a sort of macro perspective. I think this uptick in network level activity is good. I would like to see it continue, right? I would like to see this type of increase. So between October and the beginning of November, I would like to see the same type of activity increase here. This one, I think it's not necessarily a like an accurate representation of the actual amount of interest in MATIC. I think this is probably skewed by addresses that are currently looking to sell MATIC rather than like new interest. But as long as this trend continues to move up, I think we're fine. So, clearly there are signs of concern because there's people dumping. So I wouldn't be surprised if MATIC like takes another fall from here. But assuming its fundamentals stay strong, good. Okay, let's look at network growth for MATIC as well. Yeah, so network growth is the amount of new addresses that are interacting with the MATIC token for the first time. So this is the amount of addresses that have discovered / made or transferred, including MATIC, for the first time ever. It has gone to as high as 5,000 addresses. So that's 5,000 new addresses a day interacting with MATIC. That's a lot. Like, I'm just talking comparatively to a lot of other coins on the Ethereum network. That's a lot. Like, it's a crap ton of addresses. So if MATIC is able to sustain this momentum, there is fundamental support for another all-time high breach. I'm not saying that it will happen, but there's some support for it. Now, I do want to also see what its social metrics are looking like and what the MVRV is looking like. So let's start with social volume. Okay, so social volume seems to be, picking up a little bit. So there's been a spike here on the first stop. There's been a spike here today as well. So generally speaking, I mean, it looks reminiscent to me to these tops. So every now and again, we will see periods in time when there's a spike in social volume correlating with a price rise. What that typically means is that the crowd is becoming hyper aware of the rally, and a lot of people seem to be very excited about it. So if a lot of people are very excited about the rally, if you want to trade or if you want to move into a trade, you are moving into a potentially overvalued atmosphere or sort of overvalued market. So generally speaking, I don't like these elevated levels of social activity because based on some of our backtests, they are usually indicative of like peak hype or market euphoria and a potential for short-term price correction. So again, I would, because of this, not be surprised to see MATIC fall down a little bit more. But that being said, as long as its network level activity continues to grow, I think we should be fine. Social dominance is also starting to pick up a little bit. So the amount of MATIC mentions relative to other coins is starting to pick up. Let's look at the total amount of sentiment towards MATIC. Here we saw the number of mentions towards MATIC, but I also want to see whether those mentions are positive or negative in nature. So I'm going to check out Polygon here. And I'm going to look at the total amount of the total sentiment towards MATIC based on our data. So actually, you can see several times like bullish sentiment coinciding with local tops. Currently, sentiment is not that high, which could be a good sign. We might see this turn very quickly to the upside, but for now, there was a small spike here around this first top. But now it seems like compared to here, right? It seems like there's less hype around MATIC than it was around its first all-time high. Now, this might change very quickly if MATIC doesn't break all-time high. I don't think it did, right? Yeah, here it doesn't look like it did. Here it looks like it did, but I don't think so. So if it does break a new all-time high, I would expect its social sentiment to just like go through the roof once again. For now, it's actually looking decent. So some hopeful signs, some signs that we might be looking at a bit more of a correction for MATIC. When it comes to its MVRV ratio, we're currently at about plus 4%. So we were as high as plus 23%. So that's fairly significant. Let's look at a bit more of history for MATIC. Yeah, so we were at these levels, obviously moving into that like upper threshold, upper zone as far as profit margins are concerned. So around plus 25% is when people started taking some of their profits off the table, short-term holders in particular. Right now, they're about plus 4% on average, plus 5%, let's say, on their initial investment. That's the question that you then need to ask yourself is, are these short-term addresses going to be dumping their bags when they're plus 5% in profit? Or are they going to maybe wait a little bit to see their bags, you know, inflate in value before they start dumping once again? So generally speaking, I would like I said, I would like us to be here once again, so these very low levels, so that we have a more clear path to a you know, another rally. But there is still room to the upside for MATIC in terms of MVRV alone, right? MVRV allows us to grow to another sort of maybe 10-15% before we reach overvalued area once again. This is as far as short-term MVRV is concerned. Long-term MVRV, I wonder what it looks like. It probably looks like worse. Yeah, it looks worse. So we're at about plus 100%. Long-term holders are about plus 100% on their initial investment. So there's definitely, from a macro perspective, there's much more room to the downside to go. But this is the true for a lot of coins. Just like look at Ethereum, right? So Ethereum, yeah, we're at plus 40%. So there is way more room for us to drop before we can consider long-term MVRV to be undervalued. But that doesn't mean that in a short-term scenario we can't pump. It just doesn't. Like we're still fine in terms of a potential short-term recovery. So let's go back to MATIC. Okay, so we looked at network level activity, we looked at exchange metrics, we looked at that MVRV, we looked at social volume. I think that's fine for now. I do want to look at least one more coin before we end. Maybe development activity, just to kind of see what MATIC is looking like. Yeah, also development activity is picking up. I think this was a bug in our data. So not necessarily a legitimate drop in MATIC's development activity, but over the last couple of months, we are seeing once again the amount of like GitHub submissions and the general activity in the MATIC's public GitHub repositories. They're like going through the roof. Good. Like this is not an indicator that will tell you necessarily what's going to happen tomorrow with MATIC's price, but as a due diligence indicator, I think it's super important. Like you want projects that are growing in terms of development activity over time. You want projects that are showing that their team is committed to polishing the product, the sort of introducing new features regardless of what the market is doing. And I think this chart says that for MATIC. I think it's looking like the team is still very much hard at work, pushing new features, and this is what you want in a product. All right, good. Hope that helps, guys. Let's do one more coin before we end it. Max, what's number 2?
Number 2, or even number 1 in the poll now, is CIRUS Foundation. CIRUS.
C-I? Wait,
Yes, CIRUS.
RUS. All right. I don't know what this coin is, so let's look at it anyway. Seems like it's a pretty young coin. It's like 3 months old. Is it an ERC20 though? Because if it's not, we're not going to have much data for it. It is. Okay, cool. So I like it when people give me coins that I have no prior knowledge about, because I can't be biased. I can just look at the metrics, right? So whatever CIRUS is, we start by looking at its on-chain activity. So okay, now it's a good time for you to compare this to something like MATIC, right? So we were just looking at MATIC's daily active addresses, and they were about 5,000 on average, and in the last 24 hours they peaked at about 15,000. Currently, there's 15 addresses interacting with CIRUS. So this is on a 4-hour scale. I think let's just make sure that this is the same scale that I use for MATIC. Oh no, this is the Polygon version. MATIC. Yeah, it's 4 hours. So here we peaked at about 15,000 daily active addresses in a 4-hour interval. Okay, and then we go back to CIRUS. In a 4-hour interval, we here peaked at 54 and recently at like 8 or something, like between 15 and 8. So very small amount of activity in terms of just general level of interest in the coin from a network level perspective. So the amount of addresses interacting with CIRUS, by interacting I mean sending or receiving CIRUS, it's not high, and it's also not growing. So generally, I'm a little bit skeptical about these coins, even though obviously CIRUS has been pumping recently. I'm a bit skeptical when I don't see signs of growing strength in its network activity, right? Let's look at the growth in terms of new addresses to see maybe that's a bit more bullish. Okay, wow. All right, let's zoom out. Yeah, not really a whole lot happening. So there's like 4. This is what? This is a daily metric. So there's per day, there's like 6 new addresses interacting with CIRUS. I mean, it's better than 0, I guess. I don't know. Ideally, I would like us to see sort of a considerable uptick in the amount of addresses using this coin. So I don't know. Obviously, there are some caveats to this. I have no idea what CIRUS is used for. Is it like a governance token? Is it the utility token? Is it rebase? I have no idea. So keep that in mind. But if I was using this or looking at this through a prism of, I think CIRUS is a utility token, less like any other, this is not a great sign for its long-term potential. All right, let's see if there's a lot of people dumping this coin, because there's not a whole lot of people using this coin. All right, so there seems like a lot of people dumped it here around the bottom. Yeah, there has been some dumpage here. Let's zoom in a bit. Look at active deposits. Okay. Exchange inflow, right? So the amount of CIRUS coins moving to exchanges. So we have seen a sort of cluster of sell-offs here around the local bottom, which I'm not surprised about. Let's look at network profit loss. Okay, so there was some massive transaction here, but it's probably just one transaction that skewed this data. Like even if there's like one guy that moved a bunch of coins that he acquired at the top, it would show up like this. So let me zoom out of that for a minute just to see what. Yeah, okay, so this is actually decent. I mean, I say decent, but what this is saying is that there were a lot of people moving CIRUS at a loss while it was dumping, and there was relatively significant amount of CIRUS moving to exchanges. So it's actually, if you remember, it's similar to what we saw for Bitcoin, right? There was quite a bit of panic, and sometimes, assuming there's enough buy-side pressure, right? Assuming there's enough people looking to be on the other end of this trade because they believe in CIRUS's fundamentals, right? This can sometimes lead to short-term price recovery. So these periods of weak hand capitulation in redistribution of wealth to more strong individuals and stronger long-term investors can be necessary precursors to a sustained price rally. So yeah, it's an interesting thing to see, at least. Let's look at social volume. I mean, I assume we don't have much social volume for this coin. Yeah, I don't know if it's like just our channels that we track don't talk about CIRUS at all, or it's not being talked about at all in general. But we just don't have a whole lot of social mentions, at least in our database for it. So there's not a whole lot of point in analyzing it. Let's see all data. Yeah, just not a whole lot. All right, I'm not going to actually look into MVRV simply because it's a very young coin. So MVRV is best used for coins that have a lot of data, so at least a couple of years of data. So I mean, this is like, if I look at the 30-day MVRV, it's not actually going to tell me anything of value. Let's look at whales and then we can end the call. So let's look at, so I wonder how concentrated this coin is, because currently it's around, what, $0.50? So I wonder how many addresses hold like the supply of this coin, especially like large addresses. Do they have a disproportionate holdings? Do they hold a whole lot of CIRUS compared to retail traders? So okay, let's see. Yeah, okay. So it seems like this last group of holders, those holding more than 10 million CIRUS, they combined hold 87% of total supply of this coin. I wonder how many addresses that actually is. Like how many addresses have more than 10 million CIRUS? That is 5 addresses. Okay, so there's 5 addresses and they hold 87% of total supply. So if I really wanted to be diligent, then I would have to look at what these 5 addresses are. So I would go to, and we're not going to do this live on stream because it takes a little bit of time and it's more arduous tasks, but you could do that. Like you could go to top holders, look at the top holder table and say, okay, show me all of the addresses that hold this coin now, like in the last 24 hours. So these are the top five addresses. And if I wanted to, I could then go through each of these. I could open Etherscan and I could figure out what these are maybe. And, generally look if they are indeed whales, whether they are accumulating or declining. But overall, I'm not a huge fan, and this doesn't have anything to do with this coin in particular. I'm not a huge fan of coins that have a massive amount of their supply locked in a very, very small amount of coins. This is, to me, it's nothing new. Like most small coins have this type of distribution, but it just means that the coin is very concentrated. You're basically playing against very, very small group of large investors that can dump on you at any point in time. So it's quite difficult to make money on such coins, right? So I would much prefer to see, like, I don't know, the last group of addresses hold maybe 50%, 70% even of supply. 90% is a bit too much. It just means that it's a very, very concentrated coin. And it also means that there's probably not a whole lot of retail interest in it, right? Because small addresses are holding a very small amount in total, a small amount of this asset. I would definitely like to see these sort of, low-level addresses, so somewhere between, holding somewhere between like 500 and 5,000 bucks. This group of addresses I would like to see have more of an impact on the CIRUS's tokenomics. For now, they just don't. So I think that's going to be it for now. Brian, anything to add before we end?
Just want to remind everyone that you have referral links. If you have account settings on your top right over where you see Dino's icon in the top right there, you all have one yourself. You can generate a referral link, share with your friends, family, whoever may be interested in crypto, and you'll get between 25 to 35% of their payment for their first month. So we love to have you guys spread the word about Santiment far and wide. Make sure to like and subscribe these kinds of videos. It really helps out with the algorithm and continue letting us get some traction on the YouTube side of things. So really appreciate the time and appreciate all the great questions for Dino.
Thank you to OJ for giving me a bit more information about what exactly CIRUS is. He says that 87% is the team addresses and it will be released when mining. Okay, yeah, I mean, like I said, I reserve to be wrong about these coins that I have no knowledge about how their tokenomics work and what are the like 5 addresses holding so much of supply. But if this is what the people wanted to see, yeah, sorry that I couldn't bring better news, but it doesn't seem like there's a whole lot of activity currently on the network. Anyway, guys, we'll be back next week, probably sometimes in the middle of the week with another video. For the time being, bullet points for Bitcoin. Good signs and bad signs. So good signs. Address activity and on-chain circulation is still growing. It's growing into a declining price action. This doesn't happen all that much, so it's a relatively bullish sign, right? MVRV is very low, 30-day MVRV in particular. So short-term holders are now in quite a bit of pain. Historically, it's approaching that bounce back zone. It doesn't mean that it will bounce back off of those levels, but that's why past performance is not always indicative of future results. But based on historical data, we could be approaching this bounce back zone. Another good thing for Bitcoin, social sentiment is quite low now. It's only been a couple of days, but it's moving into a bearish sentiment. We haven't actually touched derivatives and funding rates today. They're currently neutral, so they're not all that interesting. But social sentiment is moving back to a predominantly bearish atmosphere, which is where we want it to be. So these are good signs. Bad signs. Whales seem to be dumping. So I mean, whales have a very strong impact on the market. So it's never a great sign to see they offload some of their bags. There's still a whole lot of people calling people to buy the dip. Generally speaking, when you look at the history of these mentions, they're never right. At least they're never right from the get-go. Like there's usually a few corrections before they are finally proven right. So there are it's a mixed bag of Bitcoin signals. Everything that we talked about today, but also a lot of stuff that we didn't talk about today, it's available on Sandbase. So if you like this data, check out app.santiment.net. check out the discount code, 25% off when you type in TWIC during checkout, which stands for This Week in Crypto. It is the name of this call. And thank you all. Like, if you like this data, if you like this type of analysis, please make sure to like, subscribe, and share the word. We are trying to grow our channel, so every sort of referral counts. Thanks a lot, and join our Discord. Link is in the description, and we can keep talking about the market there. Stay safe, guys. Just stay safe for another couple of weeks. All right. Thanks, guys. Talk to you soon.